I think it's fascinating. I mean, it seems to me we've evolved from sector rotation, which was kind of a mid-July theme, to really a rout, to a liquidation event. And as we were saying just off air, it's really all about the Bank of Japan's governor, Ueda, who came out. They surprised markets with a 15-bit hike. But then, of course, on top of that, he talked about the idea that neutral rates are a long way away. So in other words, there's a rate hiking cycle. And he's done that into, it's very interesting. So the Fed's talked about cutting, and we got a bit of that from Powell last week, a bit firmer. And the BOJ's raising, and they've done that into two extreme positionings in markets. Everyone was short the yen, and everyone was max long the Mag 7. And both those rate cycles changing influence that positioning. So it's like we're in a giant repositioning in global markets and a giant liquidity event on the back of it. So there's a lot going on. It's pretty interesting. Not to mention the macro data, which we haven't even got to.
Right. Well, looking at the Mag 7 index here in the terminal, down almost 5% today, so on pace for its worst day, actually since July 24th here. So keeping a close eye on that. But also, you moved neutral to U.S. equities in late July. Actually, it was ahead of the Federal Reserve's decision last Wednesday. Kind of unpack us how you're advising clients to position. Where are you telling them to put their money? And what would you want to buy? What would you want to sell at this point?
Well, I think it depends on obviously your time frame. So if you're sort of next couple of months, I'd just be cautious. I think markets haven't finished their sell-off today. We're in the midst of it, and there's more to come. And generally, when markets sell off this sharply, the price action dictates you get a retest, unless we get something dramatic out of the Fed in terms of intermeeting cut or very dramatic strong signaling. So short term I do that. In the medium term, I think one wants to see this as an opportunity to start moving portfolios around in terms of that global sector rotation. So our view is that markets have fashions. Every 6 or 7 years, the global sector leaderships change. And it's been tech, it's been strong. And we think it's now starting to change. We're coming into a rate-cutting cycle. I think you're going to get cyclical re-acceleration in the West. And, we think people should start positioning for that. That's small and mid-caps in the US. That's overseas equities, non-US equities. So I think the headline is we're going back to the noughties in terms of what does well. Mm-hmm. It's like Back to the Future all over again. But what goes around comes around. And I think we're going to get a consumer and housing boom over the next 1 to 4 years across the Western world. And that's going to change the equity sector leadership in the global stock market.
Looking at the VIX here, it's up about 19 points to just north of 42. It was up to a level of 65 earlier this morning, just blowing out like crazy. Does that tell you that panic is out there earlier today?
Well, there's definitely panic, isn't there? 60 is a big... I remember when I started in this business, if it went over 20, you thought it was a big number. And then, of course, that's all changed. But 60 is undoubtedly a big number. Very, very rarely do you get above that. So I think very short term, what people want to watch is do you get a bullish key day reversal in markets today? Obviously, they've opened below the lows. Do they close above levels that they saw on Friday? It seems a long stretch from here, but still a few more hours of trading. And this market is very volatile. It can move a lot very quickly. But look, most sell-offs happened in 3 or 5 waves. So we've had wave 1. We're going to get a relief rally. If you're a trader, at some stage over the course of this week, you want to get involved in that on the long side.